Hey guys, pretty sure everything on this channel is for educational purposes only and is not intended as financial advice. So it's been a day or two since the last 4-hour follow through. Let's take a look. Current price, nothing too special about the candles specifically here other than looking at this level. You can see previous resistance, then it's support, resistance. Is it support now or is it resistance? We can draw that out. Other thing that I've been watching, the inverted head and shoulders, so shoulder, head, and this is the neckline. This is some sort of diminutive shoulder. Turning on the volume here, you can see we've yet to have a spike in volume. So that tells me, we broke the neckline, the volume should come fairly soon here. And all my stuff's going to turn on in a second, but you can see when I talk about a throwback on the last video. When we go up and then back to this neckline and then up from here. So that's sort of in the cards at the moment. We're just missing the volume to confirm all of this. So there's clearly a horizontal level here. There's clearly an inverted head and shoulders that essentially has completed at this point. So those two items first on the docket. Let's take a look at Heikin-Ashi, everyone's favorite trend following indicator. Like I said before, I've said every video, 2 candles is all you're waiting for price to confirm. This has an hour on it. These aren't big candles. That says to me that there isn't much momentum here, but the opens and closes are above the previous. So meeting those specific trade conditions, you could consider a long here. I've opened manually market long, I'll tell you why in a few minutes here, but that's one viable option. So far we have horizontal zone, which should be support. See resistance, same level, support. Breaking the inverted head and shoulders, and beginnings of Heikin-Ashi, the very first time that we get 2 green candles after red candles, okay? So if you had been long from here, this would have been your stop, and you'd still be long. If you were not long, like I was not at the moment, again, you'd be looking at this. Let's look at the EMAs, which I've been watching for a few days now. This is a 50-200, and you can see bearish cross, bullish cross. Here we go, bearish cross, bullish cross, here we go. I'm expecting this to be massive bullish continuation. You can see how it pulled back to the 200 after the cross, and I'll link a video where I talk about this EMA strategy at the end of this video if you want to watch it again. It's basically the get ready, get set, go strategy. So the first get ready is breaking the 200, get set is the cross, go is when price returns to the 200. That's where bids will be the whole time. So that's where some of my bids are currently, down here around 1100, 1088, something like that. So far we have horizontal level, chart pattern, EMAs, and now we can add cloud to this. And this is the exact picture you want to see when you look at the beginning of a trend for cloud. You want to see the Kumo twist just starting. You want to see price above cloud, Kumo breakout. You want to see lagging span above cloud, above price. And you want to see the TK cross, which has been bullish for some time now. The only thing to worry about at the moment is the TK disequilibrium. So this just says it's overbought to some degree. And I kind of expect it to come back down to this level and test 1100 to 1088, something like that. And if we just pop the 200 back on here, you can see, this whole zone is fair game for a pullback. I don't think it'll get farther than 1060, which is why my stop is like 1040 to 1050 on any of these trades I'll be taking. But overall, this is heavily bullish entry, long signal, go, go, go. And if we want to look at the pitchfork again for targets, there are a few pitchforks here. You can either put the anchor here and here, here and here, or what I settled on was this high and this low. You get the median line right here, and that's your current target. Now, I certainly expect it to reach here before here, but you can see it's sort of in between the diagonals here at the moment. So this whole zone is your target, and this is your time frame at which it should reach it at that speed. We just add yearly pivots here. You can see if we break this pivot, we should attempt to break the next one, or reach for the next one, I should say. And again, keeping this median line of the pitchfork into mind, that's the magnet for price, okay? So that's where I expect price to be and to consolidate at and to act as resistance. So if we turn everything on, just drawings, you can see this is the zone, horizontal support resistance zone. And why is that the case again? Market memory, previous resistance, support, 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 and then it gets murky in here. But you can see it's, again, at the top of that zone. That's the first thing. Next thing, we're looking at this bullish bat, this pattern here, and a butterfly, excuse me. I keep calling it a bat, butterfly. And the target for any harmonic pattern is always between the 50% and 61.8%. You can see it's surpassed that. So it's already met expectations as far as the harmonic is concerned. The next target would be this diagonal, specifically for the harmonic only. So you can see it's been riding this zone nicely with flag, consolidation, head and shoulders, which actually broke up instead of down. So whenever you see that, whenever you see a bearish reversal sign that breaks the opposite direction, you can expect stronger continuation, if that makes sense. Then lastly, if I just mention oscillators, even though I don't feel the need to, because I don't care, honestly, because everything else is so clear to me. If you're waiting on anything to flip, one thing you could wait for would be the Stoke cross, bullish, currently bearish, and trying to flip in the next few candles here. And you'd be waiting for RSI to hit above the 70 threshold. And again, one RSI trade, if you're an RSI trader, you're trading one threshold to another. So you'd be long from this threshold to this threshold, and then you'd be entering a short when it breaks back into this neutral zone again. So if I were to list everything out in order of significance, again, cloud, EMA, chart pattern, Heikin-Ashi, horizontal resistance, it's looking slightly overbought, even though it already had one pullback. I like an additional pullback. I might not get it, but I've got my bids at the pullback target, which is based on the cloud. Again, I'm looking at targets at the cloud. I'm looking at targets at the 200, and that's part of the get ready, get set, go strategy. I'll link that up. So right now, super bullish. About as bullish as I can get, considering where we came from, which is saying quite a bit. And again, just looking at EMAs, close your long, open your long, close your long, open your long. Doesn't get much simpler than that. Bots trade this stuff all day. So currently back above the 200. That says we're in bullish territory. The safest bids imaginable would be at the 200. Because again, you'd be looking for get ready, get set, go. Okay, I've done that enough. Let's move to Ethereum, everyone's favorite top tier Vitalium altcoin. So we look at USD, naked, not much here. There's a nice dragonfly candle here. Green is always better for reversals than red, but clearly that was a hindsight reversal, and tweezer top, hindsight, and interim top. Not much as far as the actionability is concerned, especially off leverage. So those are candles. If we turn on everything else, we can see that we're bouncing on a previous resistance. If you can see here, resistance, resistance. I'm still looking for a pullback target somewhere in the 50% range. If we turn on the 200, we can see we keep pulling up rather quickly here to 618 now. Pretty convincingly broke down from the rising wedge at this point. Something else to watch for is the 5200 cross. So it looks like it's coming soon, in the next few days. Within the next 24 candles, I'd expect an attempt at an EMA cross, which is saying a lot, considering it hasn't happened since the beginning of January. So if I was in Ethereum long right now, on leverage especially, just like I said the other day, I'd be concerned that this isn't going to continue. You know, the bid zone is pretty substantial. Should you not be on leverage and want to just enter, I think this whole zone is certainly viable for bids. Maybe on, mid-April. Again, why? It'll break below the 200, hit the 50, bounce back up. Again, descending volume profile. Doesn't really match anything. I don't really see any chart patterns here. Something you could look for is a head and shoulders. I don't really see it. Head, shoulder, head, possible shoulder incoming, but it's pretty weak evidence overall. If you go to Heikin-Ashi, you'd say this looks like a good long. However, it's ranging. So, this whole, everything's going to turn on again, but This whole range, you can just float around in here forever, create a nice huge top until there's momentum or impetus to go one way or the other. So just like Cloud, Heikin is best used when you know it's trending versus ranging or sideways. If we switch to Cloud here, you can see the conditions for a long have certainly not been met as far as a re-entry is concerned. You can see the conditions for a short based on the Cloud basic signals has not been met here. You can, however, see that there is a edge-to-edge potential here, and again, that falls into this bid zone of between 37 and 32. So that's within probably, I think, middle of the month here. So this would be the edge-to-edge trade here to here. And if you want to relong, your entry would look like this picture, where we got, again, TK cross, pricing Cloud, price breaks Cloud, you get TK recross. Then it not only TK recrosses, but it breaks the horizontal here. So what you'd be looking at for a long would be a break of 55, essentially. Break of 55 with a TK recross, which would happen likely with that break. And you can see how the Cloud, everything's going to turn on again, but how the Cloud tries to help you out in the triangle department. Because it draws this nice cloud, and the TK cross kind of helps you out here too, as far as a close is concerned. You can see as soon as it broke that Kijun, it entered the cloud and gained some momentum down. So how much of this is actionable is rough to say, but what's definitely actionable is the TK cross to TK cross, the trend here. Again, you're looking at 80% of capture on any given trend with the cloud, especially on high time frames. So overall, if you're long, I'd be out. If you're short, you're fine until the Cloud, which is the other edge, whatever that is. As far as the entry for long short, you're looking for price above Cloud or below Cloud, just like on Dash. We'll get to that next. I was talking about that for a few days, and then the Kumo breakout happened, and then it kept going. Another target or a bid zone would be the 200. So again, anywhere from 38 to 29, 30. And why here again, anytime you see wicks that says it found liquidity, and either asks in this case or bids in this case, and it makes sense, previous resistance becomes support. And at this point you should be nodding your head that I'm repeating myself over and over again, which is the case because everything's the same. If we look at ETH BTC real quick, you can see how the edge-to-edge trade played out rather quickly. The hits of the 200 played out rather nicely. And again, so this is as far as ETHUSD bid zone. How this exactly works out between the ratio and the USD price is hard for me to rationalize or understand at this point. But the same logic applies to both charts, even though it doesn't make much sense to apply the same logic when it already happened on the ratio. But again, for a long, you'd be looking for price above Cloud. For a short, you'd be looking for price below Cloud. And you can see that the bearish twist already happened. So we look at the entry signals for the Cloud once again. You can see these are the four things you look at every time. And what you're really waiting on is price to be below Cloud. Once price is below Cloud, lagging span will also be below Cloud. But that's your entry signal, is a Kumo breakout to the downside. Your target at that point would be hard to know at this very moment, other than somewhere between 0.026 and 0.024. And let's just add that real quick here. And again, why am I saying that? It's just these wicks here. Just delete this here. Somewhere in this zone, based on these wicks and this consolidating pattern. Any triangle is also a horizontal support resist zone. Let's just add that real quick. So there's tons of evidence. This is a hard buy, I think, down here, 0.002, 0.022. So that's that at the moment. If you're long, you shouldn't be, other than based on the bounce, the 200 bounce. Overall, the trend is still a continuation, especially when you're getting bounces on the 200. But you really have to watch for the cross coming up here soon. And Cloud is already starting to roll over. So that's enough on Ethereum, I think. So if we look at Dash now for our Polo, We can see that we hit, again, any triangle horizontal is a support zone, okay? Regardless of the fib, the harmonic, anything. And that goes for any market, any time frame. Higher time frames always win. And you can see this is a triangle of some sort here. And yeah, it's retrospective, but watch it hit that zone over and over again, okay? So that's the first thing. The second thing is this insane dragonfly candle. Again, I'm looking at long wick, small body, small upper wick. Green's better than red, but this wick is better than anything. This says it hit a ton of support here. And a ton of emotion went into selling on here, a thin order book. So overall, it should have stopped at the previous high, but there was just so much just emotion and fear selling here that it just pushed it even lower to the horizontal. So that's that on naked. Let's go to Higanashi real quick, and you can see two green candles go long, and you hold it depending on how you want to play these dojis. That's between you and your exchange. So you either hold it and now your new stop would be here, or you would have been out somewhere. Your stops could just be moved up after each doji and then up to here. Overall, Higanashi likes this long picture at the moment from the drop. And anytime you get a long wick like this, that's always a good time to be looking, ahead at the candles and saying, this crazy sell-off happened. Obviously, we should be close to done, just based on the size of this wick. And the same goes for these wicks up here, especially double wicks. Like I was saying the other day, this M for murder pattern was a strong indication that this was going to pull back down. Now what you may get here is a Adam-Eve situation, a W or a V double bottom, and we can draw that in here. This, let's use the, so this and a U, and then up from here. So if this is your horizontal here, that's your neckline. So again, V, U, and then you'd be looking for a break on volume sometime over here. And it doesn't always get down to this level. It may test this zone some in here, but it might not get this low. So your strategy here would be to place bids in this horizontal zone somewhere in here with the expectation that this is already going to be a double bottom and it's going to break the neckline. Now, what strategy you could use, 25% of your bids would be here, and then 50 to 75% of the remainder of your holdings that you're comfortable trading on this coin would be at an on-volume breakout of the neckline. So that's how you would work an Adam-Eve. And some more evidence that this is going to break down again is a 4-hour still cross, bearish. And should it break this threshold, it'll attempt to reach the next one. There was a bull div on this. We got a lower low in price, higher low in RSI. So that's more evidence that as this is happening, you see the bull div, you see this insane wick, you see the dragonfly. Those are things in the horizontal support zone, things you can look at to take some action on that. So if we move to cloud and EMAs, you can see that everything's still bearish here. And asks at the Kijun are always safe when it's in bear mode. Why is it in bear mode? Price is below the cloud is bearish, TK cross is bearish, lagging spans below cloud, below price. So just snapshot this compared to the current Ethereum chart, and these conditions are what you're looking to meet for a short on Ethereum. This candle is the short entry that you're looking for on Ethereum, should it occur. And as far as the Adam-Eve target's concerned, if this double bottom happens, this flat cloud would be your target, 0.08, let's say. And the reason that's the target is because it is the 50% fib between here and here. I know it's messy at this point, but you can see 50%, okay. You can measure this out too, and it'll measure out to the same zone. And some more logic there. Here was a bear flag, so that's another triangle, horizontal support resist zone. And here was a bear flag, triangle, horizontal support resist zone. That's the neckline. So you're just moving from one bear flag to the other as far as the horizontal support resist zones are concerned. as well as the 50% zone, as well as Fibonacci retracements, as well as cloud levels. So there's all sorts of confluence for this 0.08 level. Then lastly, if we just look at EMAs and compare that to cloud, you can see we're getting a bearish cross here. And if we look at EMAs and compare that to cloud, you can see we're getting a bearish cross here. The first bull cross was here, so you'd be long, closure long, if you weren't already closed. So the strong closure long signal is definitely occurring on the EMAs here. You can see we're below the 200, and we've pulled back up to the 200. No surprise there. You can see this whole zone is occurring at the Kijun. No surprise there. This is a huge just support resistance level period. And again, this echoes what the Adam and Eve says about this horizontal zone being huge. Should it break this zone, expected to go higher. So monster video today. Bitcoin heavily bullish bias right now based on specifically cloud EMAs and Heiken Nashi. Slightly overbought, expect to pull back, buy the dip. That's what I'll be doing. Ethereum essentially neutral, leaning bearish. Watch for Kumo breakout and 5200 cross there. Dash heavily bearish bias at the moment with sort of a key level, whether or not a double bottom Adam Eve will form or not. That will determine either the affirmative bottom or bearish continuation from this point on. That's all I have for today. Like, dislike, comment, subscribe. Hit me up on Twitter, Telegram, and happy trading.